Good morning, ladies and gentlemen. Welcome to Market today on this wonderful Tuesday morning. My name is Shail Bhatnagar. Let's look at how the markets have shaped up on overnight Wall Street, as also how we shut shop today. Remember, it's a truncated week as far as India is concerned. Tomorrow, April 17th, is a holiday, so a lot of premium squeezing as far as the options are concerned will take place. But let's start with the basics. The Nifty shut shop at 250 points lower, 22,272 right there in front of you. The daily chart is there, and let's now look at the pain points as far as today's trade is concerned. Remember, it was a negative day on Dalal Street yesterday. All major indices, including the Nifty, shut shop as far as prices are concerned in negative territory, and there was heavy selling pressure. Geopolitical concerns, the problems in the Middle East, as also how commodities are rising, have put equities on the back foot across the globe. You will also see an index comparative coming in front of you. There has been weakness all around. The Dow Jones index, the Nasdaq, as well as the S&P 500 have all closed in negative territory. Let's look at how our markets are structured today. When you look at the GIFT Nifty, the cues that are coming in from Ahmedabad point to weakness. Somewhere between 120 to 150 point gap down on the Nifty, which was about 1% lower yesterday. So at 22,272, if it opens 100 points lower, one can well imagine what the market sentiment would be. Yesterday's close as far as the Nifty is concerned was around the 20 EMA. In fact, the index shut shop below the 20 EMA, and that is a problem as far as daily sentiment is concerned. Normally, what we presume is that once the index closes below 20 DMA, any index for that matter, essentially the daily trend turns bearish, and that is what is visible not only on the Nifty but a lot of other stocks in the main index heavyweight space. Out of the 10 stocks yesterday, all 10 of them who have the highest weightage on the Nifty ended lower. Now let's look at the possibilities of the market. The only good news that I see for today is yesterday's IMD forecast, the meteorological department forecast, saying that the Indian monsoon will be 106% of the long-term average. That's a very, very good sign, but those things will start getting impacted somewhere in the medium term. As of now, for today, because tomorrow is a holiday and the weekly expiry of the Bank Nifty has been also pulled a day in advance, it essentially means that it's going to be a painful day. The good point in yesterday's trade was also the lack of volume in selling. Therefore, one can presume that people are waiting for this pain to die down as far as markets are concerned, and then probably the uptrend will resume. But for now, it's best to keep quiet. Don't buy the dips. Let the Nifty settle down, and we'll wait for this overnight weakness to slip out both of the domestic market as also the overseas market, and then wait for better days. For the moment, 22,100 on the Nifty seems a possibility today, given the fact that even options premia on the Nifty will get squeezed tomorrow being a holiday. I'm talking about the weekly charts as far as the Nifty is concerned. Let's also look at some other points of view that have come in. I would like you to see the dollar index chart. This is the overnight weakness that is coming in. I would like you to see the 10-year bond yield chart, and these are the two charts that will point out to how the market is moving. The 10-year chart points out to it being highest since November 14th, 23. That's a pain point as far as US markets are concerned. And the US dollar index again rising for the 5th day in a row. That's again a pain point. This is the highest since 2nd of November. So both these points put together are pointing to weakness, and that's visible in the Indian market. Over the last two trading sessions, our foreign friends have sold stocks to the worth of about 11,000 crore rupees. In fact, more than 11,000 crore rupees in the cash market, and that is a sentimental negative as far as prices are concerned. Shortly, we'll be joined by Mr. Gaurav Dua. He's the head of capital market strategy at Sher Khan. And at 9 p.m., a dear friend, Ashish Chatramota, executive director and fund manager at JM Financial Services, will be joining us. We'll wait for both of them to have a very nice commentary on how the markets are headed. But for the moment, I'd also like you to view how brokerage reports have been shaping up. I'd like you to see the IDFC First Bank stock. There is a Jeffries report that is there's a Jeffries report that has come in, gives a buy call target of about 100 rupees. The stock price is right there in front of you. Over the last 1 year, the stock has given you a return of about 53%. Three other stocks I'd like you to see before we get Gaurav into this conversation. In fact, let's get Gaurav into the conversation. Gaurav, a very good morning to you. Mr. Gaurav Dua, head of capital market strategy at sharekhan.com, joins us. A warm welcome to you, Gaurav. I wish sentiment on the Lal Street were conducive to bulls, but ups and downs are parts of life, as also stock markets. Almost, there is this objectivity in the market that 22,000 is something that could be a possibility this week. How are you seeing sentiment at this point of time, and what are your views on the market?
Yeah, hi Shail. Very good morning to you and the viewers. See, every year, for some reason or the other, markets will give you 5, 8%, 10% kind of fall. And if you look in the hindsight, it is always an opportunity to buy. I don't see this time going to be different. I'm not a this thing technical analyst, so I'll not be able to give you this thing levels. But any 5, 8% kind of a fall from the peaks is always an opportunity in the hindsight. And you're talking about the geopolitical issues. We have had this experience in past 2 years. There was this Russia and this Ukraine war, followed by the issues in Israel and this Palestine. Both the times we have seen that the stock market showed a very shallow kind of a fall, and within a month or so, markets were back in action, and the hindsight, it was an opportunity.
Okay. Gaurav, let me just point out a few stocks in news today, and we'll be discussing both of them in particular. Let's look at ONGC and Oil India. The government of India late evening has raised the uh, windfall tax on both these public sector companies to the tune of 41% to 9600 rupees per ton versus about 6800 rupees per ton, which was there about a week ago. So that's a sentimental negative at a time when both ONGC and Oil India, specifically ONGC, was going great guns. This will obviously, Gaurav, have a negative impact on the stock price. Your view on ONGC, even Oil India, if you would like to comment on, would they at a certain lower level make a good portfolio addition? Remember, ONGC, even if it has hit a record high, is trading at a PE of 8 or 9 compared with the index PE of the Nifty at about 23. Your view on ONGC?
So ONGC and Oil India be able to trade at the market driven kind of valuation multiple because of the interference that we see from the policy makers. Whenever they have a chance or the opportunity to make higher level of growth and profits, that gets eaten away in terms of windfall tax. So I don't think that price earning multiple of 8 is going to become 14, 15, 18. That is not going to happen in stocks where you have interference. However, yes, these stocks, whenever there is a sharp increase in the windfall tax, it is an opportunity to buy into these stocks. Not only they are at low price earning, they create obviously generate huge amount of obviously cash flows, and that also means very good dividend yield on these stocks. But having this thing said, this that you can buy this ONGC and oil. Last time I was on your show and I said we will prefer to go in for the gas based stocks rather than these oil stocks. So our this picks are Petronet LNG and and this in Gujarat Gas. What we see is that the price gap between the between this propane and this LNG has been is narrowing down, and that would mean higher use from the industrial users, which is actually it's good news for these stocks.
Right. So within the oil and gas space, Petronet, LNG, and Gujarat Gas remain the top picks at Share Khan. Gaurav, any other stock that you think should be looked at, given that the markets are correcting and we remain in a secular bull market? Are there any shares that catch your fancy at current levels? Probably you may want to buy them at lower levels, but a watch list for sure. Anything that you would want to share with our viewers?
So, we always feel, as an investor, you should look at these larger trends. And if you look at next 2 year trend, 5 year trend, what you see is that the real estate and real estate are the linked stocks are going to do well. We are in a multi-year uptrend there. Normally in this space, there is a 5 to 8 years of upcycle and this 8 to 10 years of a down cycle. We have started the upcycle. So if you can buy these stocks 10, 15%, 20% lower, I think it will be an opportunity. Number two will be the engineering stocks, this capital goods stocks. These are basically play on the private sector expansion cycle. Third would be if the economy has to do well, banks also will have to do well. So we'll be looking to add some of these larger banks like SBI, ICICI Bank in the fall. Lastly, what we see is that most of the multi-baggers in India have come from the consumer space. I'm not talking about FMCG here. I'm talking about the uh, this discretionary spending, and that we believe is a multi-year story in India. There we'll be doing some aggressive buying. We like stock like Urban Fashion, Mandrella Holiday, Redico Khaitan, Sula Wines. Some of these stocks are what we will be buying, but all these stocks are for investment.
Okay, and that's a sensible thing to mention that at this point of time, your investment horizon needs to be extended for two reasons. One, prices are elevated, and two, you have a whole host of participating individuals, whether it's retailers, whether it's institutional companies, HNIs, ultra HNIs. So there is always this mad frenzy for stocks coming in. Let's discuss one more news-led counter, which is Jio Financials, the company informing exchanges and shareholders yesterday that it's a 50-50 joint venture with the US financial giant BlackRock will begin business in mutual funds as well as asset management. This has been, Gaurav, a booming space. Sharekhan itself has been one of the biggest beneficiaries over the last 30 years that I have known the company. How do you see Geo Financials disrupting the current phase of growth that is coming into the wealth management space, and an individual view on the stock if you have one?
So I think this space is there to grow. This financialization of the savings is a theme which is for 2, 5, 8, 10, 12 years. So it's this thing long-term theme, and someone like Geo with the backing of this BlackRock this entering this space, we do expect that they will have some innovative products. They are going to come up with very low kind of a this pricing structure, be it this AMC, be it this wealth management or this in broking. Also, there is expectation that a lot of their offerings will be purely on the this online kind of this format. So I think this company is set to create a lot of this disruptions in the space, And in the past also we have seen, Reliance Group, whenever it has to enter a space, it has very very large plans, and it has come and quickly taken a big chunk of share of the market. And I don't think it's going to be anything different here also. However, we don't have a buy or sell call on the stock as of now. And since their business plans are still not clear, it's very very tough to this thing take a call on their on the say fair value of the stock.
Okay, Geofin, as the price suggests, closed 354 rupees yesterday. This is, of course, mildly close to its all-time high, which was about 378, seen in the previous day. A very sharp move has already come into Jio Finance. Remember, somewhere on 6th of February, the counter was at 255 rupees, and now consolidating near 374. This is, ladies and gentlemen, the sum total of good brokerage reports and good news items that has come on our radar as far as Business Today research is concerned. Remember, there are a whole host of research reports that come, whole hosts of news that bother you, but this is the crux, two or three major ones that we discuss and that add value. IDFC First Bank, coming to you again, Gaurav, a Jeffries report that points out to a lot of positives. Let me first take your view on IDFC First Bank. The counter closed at 82 rupees around its 200-day DMA, and Jeffries has put in a price target of 100 rupees. Would you have a view on IDFC First Bank?
So, as I said, banking and say finance is a space that is likely to do well over the next 2 to 5 to 8 years. And I think IDFC will also be this thing part of the rally. Unfortunately, we don't have a call on the stock, and I will not be able to talk much this thing beyond this.
Okay. Let me just highlight what Jeffries has said about IDFC First Bank as far as the research report is concerned. I have already mentioned that the price target is somewhere in the vicinity of 100 rupees. At the moment, what Jeffries has mentioned about First Bank is it has a good recognition on deposit franchise. The tech platform and distribution are the key drivers to growth. There was an apprehension on the speed of fall of credit costs and capital needs. On the OPEX, they see levers from turnaround in credit cards, and also they see a rise in ROA to about 1.5%. That will be the key to re-rating, and they see that happening in the second quarter of the current financial year, actually the second half of the current financial year. Gaurav, the other stock that has attracted huge investor interest despite the weakness in the market is Exide. Would you have a view on this stock? Again, a record high, 408, 409 is what the stock closed at.
So Exide has actually been underperformer for a long time, and it's only when market has got some sense that they are there when you this thing talk about EVs, they have the this thing technology in place now, and they also now have orders in place. There is a clear this thing view there, outlook there in terms of growth, and their growing this thing presence in the EV segment, and that I think has led to a very very sharp upside in the stock. We have also had a look at the stock, and we believe if the way these orders for that they're talking about this thing pan out, there could be this thing much more upside from here also. So this is a stock that you should buy on dips.
Okay, ladies and gentlemen, we are waiting for pre-open trades to come right there in front of us. Remember, the GIFT Nifty Qs point to a weakness somewhere like 22,135. The Nifty will open. Remember, it closed at 22,270. in yesterday's trade. So 120 point gap down is what is expected. The Nifty was below the 20 EMA yesterday, and if it goes to 22 135, it's the 35 or 34 EMA that will provide support for bulls. Let's see how the battle plans out. But normally what we've seen is that once a gap down happens, then the index flattens out. So essentially only those people will make money who carried either long puts yesterday or shorted calls, and right at the beginning of 9:15 they will try to square their positions and block the profit that they have made. Okay, ladies and gentlemen, we have prices. Gaurav, I just request your intelligence. About 114 points lower is where the Nifty is trying to open, 22,172. Let's look at how stocks are positioned. We'll first look at the index heavyweights, and then pay attention to what's happening in the FNO space as also cash counters. Okay, TCS 1% lower, 3900. I want to see what Reliance is doing. It's in the green, 2 rupees higher, 2931. How about HDFC Bank? Bad, 32 rupees lower, 1462. How about Infosys? This is good, 11 rupees higher, 1479. Remember, Infosys will declare earnings on Thursday, and that is what we are looking forward to. Infosys is now improving, 1.2% higher, 17 rupees in the gain, 1485. Let's look at the top losers amongst the index heavyweights. HDFC Bank, gentlemen, 2% lower, 1464. Kotak Bank, 1.8% lower, 1768. Axis Bank, so it's going to be a negative for banks today, 1.5% lower, 1042. What's in the green? Infosys and mildly Reliance. So we'll just look at Infosys on the long side. FNO stocks. Amongst the top losers, ladies and gentlemen, on FNO, we have Motherson Sumi, 3.5% lower, 116.5. Petronet LNG, 3% lower, 295.85. Bandhan Bank, 2.2% lower, 172. Nothing to be worried about. Any gainers that one may pay attention to? Gujarat Gas, this is something that Gaurav has also suggested, 3% higher, 591.8. Cipla, about a percent higher, 1393. The market seems to be defensive. Yes, so 3 out of the top 4 gainers on FNO are pharma stocks. So money is moving into defense. Biocon, 0.5% higher, 266.8. Dr. Reddy's, 6030, 0.3% higher. Apollo Hospitals in the green. Exide Industries in the green, 412, 0.7% higher. A very, very quick look at NSE 500. Okay, Bear Crop is something that we had marked yesterday, opening 2.7% higher, 56.43. Let's look at the top losers in NSE 500. Okay, Schneider, profit booking, 4% lower, 725.3. EIH Hotels, 2.6% lower, 448. The Nifty, ladies and gentlemen, is now 22,126, in sync with what the Gift Nifty had suggested, opening 145 points lower. Gaurav, given the sentiment that is there in the market, how do you see these pre-open trades? Anything that catches your fancy that you will have on the top of your radar?
So, I am not very surprised that bank stocks are not doing well, and they are being acting as a drag on the market today. So, if you see what happened in US is that the retail sales showed very good growth data. That means that the interest rate cuts in US, which were expected to start in June, might get this thing postponed from here. This would also mean that the interest rate cut cycle in India will also get this thing prolonged, postponed, and this is what is I think is playing on these banking stocks today, and that is why you see this dip in the market.
Okay. One stock that I'd also like to mark news based on block deals is VST Industries, ladies and gentlemen. This is the cigarette maker from Telangana. 3750, 1.76% higher. The reason why I point this out to you was a large block deal that happened yesterday. HDFC Mutual Fund sold 3.3 lakh shares in open markets at 36.90. That's not the news, ladies and gentlemen. It's the buyer. It's Mr. Radhakrishnan Damani. He's bought 2.33 lakh shares out of the 3.3 sold, and has also increased his stake dramatically. So this is something that you need to look at. As also Markson's Pharma. Now this is a little known pharma company. Given that the trend is high for pharma in the moment, the counter is opening 2% higher, 158.80. And the reason why I point this out, ladies and gentlemen, is that the Massachusetts Institute of Technology has purchased 66 lakh shares in Markson's Pharma at about 158. So these are the two stocks based on bulk and block deals that I'd like to highlight. We are also waiting for Mr. Ashish Chaturmota to join us in our pre-open session. And okay, Ashish bhai, welcome. What a time to have you on the show. Firstly, happy Navratras. I think we are meeting after a very, very long time. I hope all is well with you, and of course your funds that you manage so well. How do you see sentiment, and where are we headed?
Good morning, Shail bhai. Happy Navratra to you and all the viewers. It's a pleasure joining this show. So as far as market sentiments are concerned, I think there's some amount of volatility which is there in the market, and that's the reason in the last 8-10 trading sessions you must have observed there's a very strong rally which we have witnessed in some of the precious metals, whether it's gold or silver. Both have done phenomenally well, and obviously being a high beta, silver is doing extremely well as compared to gold. But that's where we could have got a sense of how markets are trying to show some kind of indications, and that's where we believe that volatility is going to increase in the market. And obviously the kind of rally we are witnessing in the overall metals as a basket is also very surprising, and also going to lead to some amount of rise in the inflation at a core level. So I think what we need to adjust the portfolio is keeping this two things in mind, that if inflation is going to sustain, which means there is going to be there is going to be some more time for any kind of serious rate cut to come into the market. And that's where my thinking is that the portfolio need to be little defensive. Portfolio need to be more aligned towards a large cap as a space, because there I think at least if there is going to be a correction, the downside is going to be limited, because the valuation comfort is still very high in the large cap. They have not seen a phenomenal rally as compared to small and mid cap in the last 1 year's time frame. So that's why the downside is also going to be a little limited, and that's where our thesis is that we need to be aligned more towards a large cap. Now coming to the sectors, as I mentioned, we need to be in the defensive. So what do we mean? We mean to be in pharma. We need to be in some kind of consumption theme which are less impacted due to any kind of serious risk of sentiment which is emerging in the market. Second is, I think some of the domestic themes. So like power is one thing which is going to do extremely well, because we know that power shortages are at its peak, and we need serious amount of investment in the renewable energy segment. So our topic in this segment would be NTPC. We have been mentioning this stock for a very long, and I think this is a stock as a disclosure we continue to hold in our portfolio. But my sense is with 30 gigawatt addition of renewable energy in NTPC, this will see sustained rally. From a technical perspective, on a monthly chart, on a weekly chart, on a daily chart, everywhere there's a strong uptrend which is going to continue in NTPC. So keeping 330 as a stop loss, we believe 450, 460 is a potential upside one can witness in NTPC. Defense as a basket we continue to like, and within this space, I think stocks like Bharat Electronics Limited, Garden Rich Shipbuilders, Cochin Ship, these are the names we continue to like and hold in our portfolio. But if I have to pick one, then I think it would be Garden Rich Shipbuilders, with almost 10 times book to bill ratio, strong operating margin, strong return on capital employed of more than 20%. This gives us a lot of comfort. So my sense is technically 780 is a strong base for Garden Rich Shipbuilders. And looking into the medium and long term charts, it looks like stock is poised for a move towards 1100 to 1200 in a short to medium term trajectory.
Okay. From your side, we'll keep in mind NTPC and Garden Reach Shipbuilders. Ashish, let me just point this out to our viewers. Remember, Ashish has been one of the biggest votaries of the PSU pack and NTPC. I can personally vouch from 220 rupees onwards. He's had a consistent buy, and that has worked out very well. Pre-open rates have settled, ladies and gentlemen. The Nifty trying to open 150 points down, 22 125, right in sync with what the gift Nifty suggested. More pain coming in the Nifty Bank, 47 436. Remember, it's the weekly expiry of the Bank Nifty that has been pulled a day in advance, and that's how it is, 336 points lower. Further pain in the IT index, 1% lower, 355 down, 34,108. And the NSE 500, the broadest measure that we track, is opening 0.5% lower, 20,361. Undoubtedly, a day of pain ahead on Dalal Street. Ashish, how do you see the PSU pack? You've mentioned actually the four stocks that you've mentioned: NTPC, BEL, Garden Reach, and Cochin Shipyard. All of them are from the PSU pack. But how is the overall health of these stocks?
So I think we need to look into this as a relative strength as a concept, and I believe in a volatile market, these stocks have been consistently showing very strong uptrend, whether it's PSU banks or whether it's CPSC ETF or something related to power and defense. There we have seen a very consistent moves coming into the market, and what we understand is because the size of opportunity in this space is really big. So if I speak about let's say defense as a basket, then it's a 10 lakh crore kind of opportunity which we are going to witness in next 4 to 5 years time frame. And if you look at book to bill ratio of most of the defense companies, it is in a range of 5 times to 10 times. So when we speak about Cochin Shipyard or Garden Reach or Majgaon, there the book to bill ratio is almost 10 times. So which means that if the revenue is almost 2,000 crore, their order book is close to 20,000 crores. In case of some of the PSU defense companies, it is almost 5 times. And we also need to understand, because of the monopolistic kind of business these companies do, and with size of opportunity at such a large scale, and because of indigenization almost hitting almost 90-91% in some of the cases like Bharat Dynamics, the operating margins are significantly higher. So for a PSU company, making operating margin of close to 20-21% is something which will keep these stocks in a strong trend, and that is getting reflected into the price behavior as well. So that's a sense from the entire defense basket. I think these are the names which we continue to like it. As far as PSU banks are concerned, what we need to understand is the credit to deposit ratio of most of these banks are in a very comfortable zone. What we are observing is the net NPA numbers below 1%, and the NIMs trading almost around 3.5%, gives us a lot of comfort with a valuation of almost 1.1 time forward price to book. So this is the reason why we don't see that, because of the risk which is emanating in the market, these stocks are not going to see some sharper correction. In fact, if there is any dip, I think stocks like SBI, Bank of Baroda, Canara Bank, they would be my preferred bets on any dips. And as a disclosure, most of these stocks which we have discussed, we continue to hold in our portfolio. My preferred bet would be PSU Bank V CTF, which is trading around 78. My sense is 73 is a strong support, and I believe this ETF itself should be traded in a three-digit mark in coming few months.
Okay. The more I praise Ashish Chaturmota on his ETF calls, the less it would be. Let's get Gaurav into this discussion. Gaurav, a very quick view from you on the defense space. What would be your top pick there?
So, we are holding HAL in our fund for a long time. We are holding it from this 800 rupees, and we are happy to hold that. I think it's a much more, more this in clear picture. And we also have this in Mazgaon dock. So these are the two stocks that we are holding. In the power space, our pick is this in BHEL. That is again a stock that we are holding since 100 rupees, and we feel that it is going to be a play on the entire private expansion cycle. It's a play on this power space. We also like NTPC and and this, and this in Coal India. When we talk about banks, I spoke about SBI. That is our pick. Apart from SBI, we also like this is BOB, and and this is Bank of India. We
Right.
for past 1.5 years have been asking our clients to buy ETF of of this public sector bank. ETFs about 1.5 year, 2 years back used to trade at around 18 rupees. They are at like around 80 rupees now, and I feel there like still
Right, sir.
space there.
Please allow me to open the market for our viewers. Gauravji, I'll come back to you in a while. The Nifty, ladies and gentlemen, is opening 140 points lower, 22,130. The Nifty Bank, remember it's the weekly expiry of the bank, 400 points lower, 47,372. The IT index is in terrible pain, 1% lower, 374. Let's look at the index heavyweights. Ladies and gentlemen, all 10 of them are in the red. This is not a good start for the bulls. Let's look at what Reliance is doing. Remember, this was the only stock that held up the Nifty yesterday. Now opening 22 rupees lower, 2906. How about HDFC Bank? 11 rupees 40 lower at 1483.05. How about Infosys? Remember, this is the earnings boy. Weakness here again, 19 rupees lower, 1448. Which is the top loser in the index heavyweights? At the moment, TCS. Despite stellar earnings, 1.6% lower, 3879. Bajaj Finance, 1.4% lower, 6975. Remember, the index is below its 200-day moving average now. I'm talking about Bajaj Finance. My apologies. Tata Motors, 11 rupees lower, 989. Kotak, Axis, ICICI, all down less than a percent, but in the red. A very, very quick look at what's happening on the FNO space. Most active counters, Idea Cellular, 3% lower, 1275. ICICI Bank, about a percent lower, 60,069. A very quick look at what's happening in NSE 500. I think a strong move is coming in defense. Jio Finance, 3.5% higher, 367. What we'll do is let's get in touch with both our analysts. Ashish, coming to you first. Anything that catches your fancy in the early part of the trade? Metals, there is no stopping them. I think it's a fresh high as far as NALCO and National Aluminium is concerned. And then metals index itself is in the green, 89.17. How do you see the market opening? Your top pick.
So my topic would be definitely from metals, and that would be NALCO itself. And as a disclosure, we hold NALCO in our portfolio. I think aluminum is coming out of 3 years of consolidation, and I think this is the trend we are witnessing in most of the commodities, whether it's aluminum, zinc, lead, copper, nickel. I think there's a very, very strong trend which is emerging. It could be because of China putting a stimulus, or there's a hope that there's going to be a lot of economic activity revival which will happen in China, and this is one trend which is trying to create some serious uptrend in most of the commodities, and also US banning some of the commodities from Russia. So this is also going to keep these metals in a very strong uptrend. Technically speaking, NALCO is a consolidation breakout of almost multi-year breakout which is happening. So I think keeping 170, 172 as a base, it looks like NALCO is heading towards 220 to 30 in next couple of months. So NALCO would be my top preferred bet. In the defense basket, Garden Rich Shipbuilders is something we continue to like, and I think the stock has formed a strong base around 820, 830 in the short to medium term. As a disclosure, we continue to hold Garden Rich in our portfolio. My sense is 1050 in a short term and 1200 in a medium term is what we are looking in Garden Rich Shipbuilders from current levels.
Okay, ladies and gentlemen, it's not as bad as it seems. The market is fairly okay. I see very strong gains coming in select counters. We'll discuss them a bit later, but let's do a quick recce of the broader market. The advanced decline ratio at the moment is almost equal to each other on the Lal Street. 1176. Okay, it's improved actually. 2:1. So bulls are on the front foot now. 1200 stocks in the green, 680 in the red. Okay. Now, which is the top index in the green? It's the small cap index. So buying coming back at lower levels. 0.35% higher. The Nifty small cap 100 index, out of 100 stocks, 70 in the green. A very quick look at the NSE 500, 20,412. Out of 500 stocks, 300 are in the green. Sectorally, the metals index, the Nifty Alpha 50 and the Nifty Media Index are in the green. The IT index is the top loser, 1% lower, 34 100 for you, ladies and gentlemen. Now let me look at stocks that are doing the round in terms of gains. A very quick view on Jio Financials from you, Ashish. 3% higher, one of the top gainers, very heavy volumes.
So we like Geo Financials, and as a disclosure, we have Geo Financials in our portfolios as well. And yesterday there is a news where they've done a JV with BlackRock for starting a wealth management and a broking business. And I think those kind of news flow will continue to be seen in Geo Financial, and this will keep the stock in a very strong uptrend. My sense is stock has formed a fresh base around 340 350 trajectory, and looking into the medium to long term chart, it looks like we are headed towards 450 in the medium term. And positionally, I think there's going to be a lot of interest in the stock. So ideally, any kind of dips, there's going to be I think Geo Financials would be of great interest in the entire NBFC space. If you look at the short to medium term relative performance of Geo Financials, also it clearly indicates fresh money is chasing the stock. So I think it looks quite promising even from current levels.
Okay, very quick view coming in from Gaurav. Gaurav, the markets have, more or less opened in sync with what were expectations, about 100 points lower on the Nifty, 22,150 for you. How do you see this market open? Anything that catches your fancy? You had mentioned Gujarat Gas. It's been one of the top performers in early morning trade. Anything that, apart from Gujarat Gas, that looks good to you?
So you think the U.S. This markets ended on the low yesterday, and despite that, your small cap index is up. This shows the strength of the market. Number one, I think just like March, the volatile phase in this month also might not be very deep. It might be very shallow. Number one. Number two, we believe that the metal stocks will do well. No, this Hindalco is a stock that we are holding. We like the stock. Apart from the fact that the aluminum the prices are high, we also like the fact that there's a lot of improvement happening there in terms of improving the performance of their this European business, which I think will do well. So that's a stock that we are holding and we like to buy. Apart from this, we have already spoken about Geo. Geo is a stock that we are holding in our fund, and I think it's a this a buy on all the opportunities because of their very big plans in the in the space.
Okay. Okay. Ashish, it's been a while since we spoke, and I'm glad you are here at a time when a lot of commodities, including precious metals, are at record highs. Gold, it resonates across the board. Indian housewives, businessmen, people on the street, across the board love this precious metal. How are you playing this rally on gold in the markets via equities? Any views that you could share?
So, Shalbhai, we like gold and silver both as a commodities, and I think from a gold perspective, I think the way we have seen a decisive breakout on the long-term chart, it looks like we are headed towards 2,500 dollar per ounce, and that's a view we have been holding for a while. And I think as a natural hedge also against the inflation, gold should be part of the portfolios as an asset allocation. Earlier, we used to give a target allocation of around 5 to 6%, but we believe now looking into the long-term trajectory we are witnessing in gold and silver, this precious metal should be somewhere around 8 to 10% of the overall portfolio, because there's a very long-term decisive breakout which we are witnessing, and now with this Iran-Israel issue also escalating, I think these commodities will be in a very serious traction. As far as silver is concerned, I think from a dollar perspective, it looks like we are headed towards 35. So currently it is trading around 28.2. So ideally it should see somewhere around 35 as a rally towards silver. And to play this, I think there are certain companies within markets which we can try to place, whether it's Hindustan Zinc or Vedanta. But as a disclosure, we don't hold these stocks. In metals, in commodities, we continue to like National Aluminium as our top pick. But definitely to play this silver rally or to play this entire rally in aluminium, copper, those kind of commodities, I think even Vedanta is one tactical play which looks quite promising.
Okay. You won't be wanting to play the gold theme via stocks such as Muthoot Finance and Manappuram Finance, or maybe Titan or Senco, Ashish?
Yeah. So definitely we are holding, and I think Titan would be my preferred choice within this entire basket, because Titan is something which has formed a very strong base around 35, 50, 3600. So that it's offering a good risk reward at current levels. And my sense is stock is headed towards 4000 in a short to medium term time frame. So yes, Titan would be a preferred bet. If in the small and mid cap basket, definitely Senco is one stock which has been catching the eyes. We are seeing very strong volume activity. In fact, yesterday we have seen more than 50 lakh shares being traded in the stock, and in the early morning itself the stock has crossed 10 lakh volume. So there is a lot of interest in the stock. But yes, we have seen a sharper rally in the last 3 days. So I think from a risk reward perspective, if we have to keep some strong support, then ideally it comes around 800, 850 trajectory. So ideally any dip would be a good area to enter into Senco. But looking into the medium term chart, definitely it's a decisive breakout moving towards 1200, 1250 in the medium term.
Okay, ladies and gentlemen, let's do some option spotting. Given the fact that the Nifty has fallen sharply, it essentially means that a swing trade in the making could be a strong possibility. The PCR will fire uh, Nifty 22,200 call, that is there at about 80 rupees right there in front of you. The reason why I mentioned this is that there has been a strong bout of short covering that's happened in the first 10 odd minutes of trade, and at the moment this one's trading at 82 rupees. Between the three of us, Gaurav, Shail and Ashish, Mr. Chaturmutha is the best person to comment on this option trade on the long side. Ashish, would you stick your neck out?
Shall I? Sorry, but I don't comment nowadays on derivatives. But yes, from a broader market perspective, my sense is we have seen a kind of
Okay.
a bottom in place, because I think we opened up gap down, but looking
Hmm.
into the broader advanced decline of the market, the way stocks are recovering from days low, it gives us a
Hmm.
sense that there could be a good rally towards 22,350 to 22,400 kind of trajectory in a very short span of time. So keeping this in mind, I think in the short term there could be some positive action which could be seen in the market, and we have seen 3 days of the fall, so there could be good bounce back which can be witnessed at current levels.
Okay, now this is, remember, an educative exercise. On April 9th, 2024, this call was trading at 616 rupees. It is now available at 87 rupees. And let me just do an internal check, and I'll give you a very good data on this one. The day's low on this one, ladies and gentlemen, is 70 rupees. At the moment, I think the price has escalated to about 92 rupees. So do keep this in mind. This is an exercise that we often do, pointing out good options trades to you. Remember, the Nifty had opened gap down, the second successive day of pain, and 22,100 has been tested. If there is a continued bout of short covering and improvement in sentiment intraday, this call will do well. Gaurav, would you want to stick your neck out on 22,200 Nifty call, or would you stay away?
So that's the thing, not my strength. Options and and this derivative. But however, I just spoke to you that markets opened with a dip. The U.S. market closed at their lows, but still you are looking at small cap index going into green. Mid cap index is also started to go into the green. This is showing excellent strength in the market. Yes, then there is a trade on the long side here.
Okay, we'll keep this in mind, ladies and gentlemen. And now, what we'll do for you is something a bit different. Let's get Ashish back into the conversation. He has one of the strongest grasps and understanding of ETFs that I have known. And two ETFs that Ashish pointed out really early were the PSU, Nippon PSU ETF, somewhere like 28, 29 rupees. This is better known as the banking PSU banking ETF, and of course the CPSE ETF about 33, 34 rupees. Both of them are now somewhere in the vicinity of 80. Uh, Ashish, how is the universe of ETFs shaping up? Anything that catches your fancy that you may have added to your PMS, or anything at least which is on your radar?
So definitely these two ETFs we continue to hold in our portfolio, and we firmly believe that there is a very structural change in trend which has we have witnessed in the last 3 years. We have shifted from growth to value, and that's where this entire theme supported not only the PSU bank, which was at that point of time trading at hardly point 0.5, point 0.6 time price to book, at multi-year lows, and we started witnessing a very strong relative outperformance in 3 to 4 months time frame, and that is how we started catching this ETF around 27, 28 trajectory. Today it is trading around, I would say 80, 84 kind of 78 kind of levels. But my firm belief is this ETF itself should test somewhere close to 100, kind of trajectory, because most of these PSU banks, except State Bank of India, are trading around 1.1 time price to book, with strong loan growth momentum of almost 16 to 17%, very low NPA numbers, and I think the way deposits are chasing most of these PSU banks, they are in a much comfortable position as compared to private banks from a deposit perspective. So I think 1.15 to 1.6 should be the ideal price to book for most of these banks, and this could result in a good 30 to 40% upside in these banks over a period of time. So this would be my preferred bet. As far as CPS ETF is concerned, it's a very good proxy play to play the defense, to play power, to play the entire, even the high beta, I would say crude or oil marketing companies, which typically I would avoid to take as an independent call. But because this CPSC ETF has a reasonable exposure to most of these names, it would be a very ideal candidate. And this ETF also, as you rightly mentioned, we started recommending around 27, 28 kind of trajectory. My firm belief is this, because we are very positive on NTPC, Coal India, some of the oil marketing companies and defense particularly. It looks like this ETF is poised for a move towards 100, so again there could be a very decent rally which we can witness in this CPSC ETF as well.
Okay, so these two ETFs, Ashish, you've recommended over the last 2.5, 3 years. Anything new in this space that attracts your attention? By new, I meant that it has come on your radar recently, but of course, it's a listed entity over the last many years, if not a decade.
So one thing which is very interesting is from the commodities perspective would be gold and silver would be CTF, Shalbai, and I think the way the structural rally is being witnessed in both these ETFs, I think there is a good possibility we might see some sustained up move coming into both these ETFs, and the good part is rather than buying the fresh the physical gold or silver, there's a way to play this through these ETFs. Gold beast is something which is available, and silver beast, both these ETFs are available. And I think because of the heightened volatility in a geopolitical environment, and with interest rates not cooling off because of rising inflation, both these ETFs should do extremely well. We can do a sip kind of thing in both these ETFs, because most of our households like an exposure to gold and silver, and this could be a good play to ride this trend.
Okay, hold your horses here, Ashish. Let me get Gaurav into the conversation. Gaurav, my last question to you before we let you go today. Any views that you would want our viewers to have on ETFs? Anyone that catches your fancy?
Yeah, the new ETF that we have added in past 5 to 8 months is the healthcare ETF. I think, pharma as a space is started to do well. Lupins and Sons of the world, which went down by 60 to this 65 percent from 2015 to 2022, have started doing well. You are seeing margin expansion there. The pricing, this inflation in the US is also easing out. So I think that's also a space. Either you can play through MFs, you can buy this pharma fund, or you can go and buy this healthcare ETF.
Okay. With that, Gaurav, thank you so much for your valuable time that you spent with us on this lovely Tuesday morning. The stocks that we'll keep in mind on your behalf are, of course, Gujarat Gas and State Bank of India. Again, thank you so much for spending your time with us. Have a nice day. We'll get back to the markets, ladies and gentlemen, and as I had pointed out, the beauty of options, you will just see a very nice uptick coming into the option call that I had highlighted. Remember, we caught it at 82 rupees. It's now at 106 rupees. That's how, ladies and gentlemen, you trap momentum. I am hoping that you'll see it on screen. Okay, 91.8, it's recently touched about 106. So we'll keep this in mind for two reasons, because 22,200 is now on the board as far as the cash nifty is concerned, and we have a strong resistance at about 22,212. Let's see whether it can scale up above that or not, but at this point of time the trade looks to be in the right direction given the momentum in the market. A very quick detour into the market. I just want to point out a couple of highs that have come in. AG's Chemicals 515.6, 5.5% higher. You have AB Capital, they have an event lined up today, 209.50, 1.9% higher. The Nifty is now down just 75 points, ladies and gentlemen, 22,200 right there in front of you. Remember, the day's low was 22,100. So this is how the markets are structured. Let's look at the broader markets in terms of advanced decline ratios where there is excitement. Okay, we had started with just 4 indices in the green. Now about 8 of them are in the green, led by the small cap index, up about 0.7% at 16,335. Remember, this was up just 1/3% when we began trade. What also is rising, the metals, the auto, the energy, and the pharma index. Okay, what we'll do is, let's get Ashish into this conversation. It's rare to have him for a long while. Now, Ashish, you've spoken on ETFs. You've mentioned stocks such as NTPC, BEL, Garden Reach, and Cochin Shipbuilders as your favorite picks. Tell us, where do you still see overvaluation, froth in the market, from which you are keeping away?
So Sharbai, as we were very, very positive on the entire railways as a basket, but for last 2-3 months we have kind of booked our profits in this theme, because we believe that yes, structurally the size of opportunity is very, very large, but looking into the valuation, looking into the kind of rally we witnessed in this basket, I think there is going to be some time correction, some consolidation which will continue. So I'm kind of avoiding any kind of position into this as a basket. So this is one space which looks kind of sideways to me. FMCG is one pocket which has not performed well, but we need to understand from a valuation perspective, most of these FMCG companies are trading at a very high PE multiple, but we are not seeing serious amount of volume growth or kind of top line growth coming into this basket, and there is a risk of raw material inflation which most of these FMCG companies are witnessing. So despite their underperformance in last 3 months, 6 months, we believe that this space is going to be sideways only. So rather than doing any kind of bottom up approach or kind of serious allocation, it looks like this sideways correction can continue for a while. So we are avoiding any kind of serious bets into it. Our focus is predominantly on the domestic themes, on the manufacturing, capex, defense, power. These are the main themes which we think one should be overweight at current levels. And IT, despite despite the stock seeing correction, but we are not seeing some serious amount of constant currency growth coming into most of the large cap IT companies. So here I think one should be little underweight, whereas mid cap IT companies are showing some serious signs of strength or comparative relative strength as compared to the large cap IT. So we would like to put ourselves in placed into the mid cap ITs versus the large cap IT names.
Okay, so you're sideways on FMCG. You believe railway for the moment, the railway theme for the moment seems to have played itself out in terms of the sharp uptick that we've seen. And of course, mid cap IT remains a good hunting ground. I can never forget KPIT, Birla Soft, and Tata Elxsi, which you have consistently rode over the last 4 years or so. Anything in the mid cap IT space that catches your attention, Ashish, which might be available at, how should I say, reduced relative prices to itself? It essentially means it's corrected and then probably you'd want to buy it. What catches your fancy?
So definitely in the we think that aerospace is one a very big opportunity which we are going to witness, and to play this entire aerospace theme, there's a company called Cyient Limited, and as a disclosure, we continue to hold our positions in the stock in our portfolio. So Cyient is something which is of interest to us. The stock has hit a fresh all-time high of around 2450, and then saw some correction in the last a couple of weeks, now quoting around 2099. My sense is there's a strong base being formed in the stock in around 2030 levels. Keeping this in mind, there's a strong possibility stock can eventually cross the previous all-time high of 2450. So there's a decent upside which is possible in Cyient. Apart from that, I think Persistent is one stock we have been consistently bullish, and this stock has also seen some profit booking from its all-time high of almost 4400, now trading around 3970. So my sense is a strong base has been formed around 3800 levels. Keeping this in mind, there's a strong possibility stock is headed towards 4700. As a disclosure, we continue to hold Persistent also in our mid cap IT portfolio.
Okay. Remember, ladies and gentlemen, the price that you see on Persistent is a stock split adjusted price of 1:1 rupees, 1:1. The stock was somewhere like 8800, somewhere like February 19th, and from then on, we've seen a mild bout of profit booking. Ashish, if regulations permit you, would you name a stock that you have added over the last 1 month, maybe a fresh purchase or something that you've added either on the rising channel or maybe average lower in your PMS portfolio?
Yes, Shalbhai. So I think, as a disclosure, we have been consistently adding stocks in the defense basket. That is one space which is of great interest to us. Then I think in the auto basket, we have been consistently adding Maruti. We firmly believe Maruti is a very very big player in the hybrid segment, and there is one space which is of great interest in the CNG segment. Maruti has got a market leadership. So and from a PE perspective, I think the EPS which we expect is going to be 500, 520. And keeping this in mind, I think there's a good possibility stock is headed towards 14,500 to 15,000. In the small cap space, I think there's one stock which we have added is Shriram Piston in our portfolios as a disclosure. And this we added around 1650, 1700 kind of trajectory. But we believe the long-term charts are very, very promising apart from the fundamentals, and it looks like stock is headed towards 24, 2500 in the medium-term trajectory.
Okay, so from the auto space, an ancillary called Shriram Pistons. I remember we've been highlighting this stock from 1100, 1200 rupee levels, and very recently our common friend Mr. Avinash Gorakshakar was also here. He had highlighted the stock somewhere like 1500, 1600. From then on, 2000 is on the charts, and given Ashish's very strong command on how he reads charts, 2400 looks good. Maruti, you've added within the defense space. Let me be clear, your top pick is Garden Reach. Am I clear?
Yes, so Garden Ridge is my top pick in the defense space, and apart from that, Cochin Shipyard would be my second preferred bet. So these are the two names we believe, because the book to bill ratio is almost 10 times. We have seen a very strong operating margin in both these companies. From a return on capital employed perspective, Garden Rich is close to 20%. So this gives us a lot of comfort. And if we look at the overall size of opportunity in the Navy itself is close to 3,82,000 crores. So this gives us a lot of comfort in the medium to long term in both these names.
Okay, so these are the two stocks from the defense space that we'll keep in mind. Remember, Cochin Shipyard is again a split stock. I think 1:2 was the split ratio most recently, and of course, Garden Reach hasn't shown any such splits. Masgaon Dock was last year's fabulous pick, about 400 to about 2,200 rupees has been a single set move that has happened. Ashish, what else catches your fancy? We've discussed defense. You're staying away from railways and FMCG. Mid caps, how about mid caps? How are you playing the small cap and the mid cap theme within the PMS portfolio? What have you added? And more importantly, where have you booked out?
So, as I mentioned, we booked out of railways. We were very, very positive, and we made some very decent returns in most of these names, whether it was RBNL or Railtel or Titagar Wagon. Most of these stocks we tried to catch on early, and we booked at a reasonable profits in most of these names. What we like at current juncture is the wire and cable segment, and we firmly believe if India is going to ride on this capex and manufacturing theme, then the proxy could be railway, should be wires and cables as a segment. And if you look at companies, we have been consistently talking about names like KEI, Polycab. We continue to hold these stocks in our portfolio. We believe these companies will see a top line growth of minimum 17 to 18%. The operating margins of profile of these companies are very, very strong. The cash flow from operations have been consistently very good for companies like KEI, Polycab, Par Industries. And looking into the long term trajectory of capex and manufacturing as a theme, we believe these companies will consistently do 18% kind of top line growth, and a very decent exposure to the export market as well. So keeping this in mind, I think these names will continue to do well. Polycab, which had fallen because of wrong news, I think this stock has started showing some stability in terms of price behavior. It looks like the negative has already been discounted into the price. And keeping this in mind, I think 5200 is a new base for the stock. Technically speaking, stock is poised to cross its previous all-time high and target somewhere close to 6,000, 6,100 in coming few months. KEI, we continue to believe is a great structural story, and we believe the stock is poised for a 45 to 4600 kind of move in a medium term trajectory.
Okay, ladies and gentlemen, I think we've squeezed out enough information, investment ideas, and great themes from Ashish Chaturmota. It's time to bid him goodbye. Ashish, it's always a pleasure to host you on Business Today, as also on Market Today. Thank you so much for your time. And from your side, we'll remember NTPC, BEL, Garden Reach Shipbuilders, and Cochin Shipyard as far as the PSU space is concerned, not to mention Canara Bank, BOB, and State Bank of India. From the auto space, you've added Maruti and Shriram Pistons most recently, and of course the cable and wireless space is something that you still like. Thank you so much for your time, and we hope to welcome you again very shortly.
Thank you, sir.
Okay, sir. We'll again get back to the market, ladies and gentlemen. The Nifty now vacillating between 22,185 to 22,200. This is a zone where it has been stuck for the last 20 odd minutes. But overall, the situation as far as markets are concerned is improving on the bullish side. I'll give you a very simple statistic to prove my point. Now about 1450 shares are in the green compared with 520 on the Lal Street. Remember, this ratio is improving dramatically as we speak. The number of indices now in the green are about 10. Remember, we started with just 4. Within these 10, the small cap index is showing the highest gains, 0.8% higher, and within these 100 shares, 78 are in the green. As far as the NSE 500 is concerned, it had moved mildly in the green. Now 20,460 is what we see. I'll just mention what has been the low for today, so you can well imagine how buying has come in. The low is 20,326, and now at the moment 20,460. Out of 500 stocks in this index, 323 are in the green. Let's drill down this market further. Let's look at the most active gainers on the market today. Absolutely, it's Jio Finance. About 850 crores worth of transactions have happened. 3.5% higher, 366.45. ONGC, now this is something that deserves mention, and it is important to note that the government has increased the windfall tax on ONGC, India's top oil explorer, by 41% to 9600 rupees per ton. Despite that, there has been a green tick on the counter, 2.5% higher, 286.90. There could be two reasons: continued geopolitical tensions in the Middle East, which is the largest producer of crude oil. Also the fact that Jeffries, there was a very recent report that came out on ONGC, which put in a price target of 370. So any dip here is being purchased. 514 crores worth of shares have been traded on ONGC. Gas Authority and Exide, these are the two counters that again I'd like to mark. Both of them are in the green. 2% higher on GAIL, and about 2.7% higher as far as prices are concerned on Exide. It's taking it away. Days high 420.8, ladies and gentlemen. What we'll also do at the moment is look at what the Bank Nifty and the Fin Nifty are doing, and we'll also look at the 22,200 Nifty option at this point of time again. Let's see what the price is. It's now somewhere in the vicinity of 80 rupees. I see, okay, 90.35. The PCR has the latest price. I'm not getting it updated. We'll also see the Bank Nifty as also the Fin Nifty. Remember, these are the two indices which have their weekly expiry today. We'll go with the Nifty Bank first. I'd just like to point out the low for the day, and you can imagine then what has happened. The low of today, ladies and gentlemen, was stuck in the first 5 minutes, which is 47,316. The index is at 47,513. So a 200-point uptick has happened on the Nifty Bank. And very, very quickly, I'll tell you before we end the day, is the Fin Nifty. Remember, it has its weekly expiry today. The Fin Nifty also is at 21,096. The low for today was 21,028, and at the moment 21,048. Nothing much happening there, but that's the structure of the market. My own understanding is that possibly you'll see this gap that we had seen in the morning of about 145 points filled up. Whether the Nifty will end in the green or not, we don't know, but tomorrow is a holiday, and that is impacting options statistics a lot. We are headed for earnings from Infosys and HDFC Bank on Thursday and Friday respectively. Thursday is also the weekly expiry of the Nifty. So this truncated week is filled with events. The only good thing that I have made out was the IMD forecast for monsoons, 106% of long-term average. That is going to play out well over the next week or so. But for the moment, ladies and gentlemen, what we'll do is we'll call it a day as far as market today's morning session is concerned. I'll meet you again at 2:30 p.m. to do the last 1 hour of trade. But it's good. We have seen initial panic being absorbed by the market, and let us see how 22,200 acts as far as bulls are concerned. My understanding is that you'll see that broken, and the option trade that we have highlighted, 22,000 200 Nifty option call expiring April 18th will do justice to our choice. Thank you so much for your time. Please remain glued to Business Today for all your financial news needs. Thank you once again.
Hello and welcome to Business Today Television. You're watching Market Today, and I am Siddharth Zara. With me now is Sameer Seksaria, the Chief Financial Officer